Joining me now is Fitch Ratings Global Head of Economics and also Head of European Sovereign Ratings, Brian Coulton. Brian, welcome. You have downgraded Portugal, I think, in March. Yeah. But why do you think that this happened now?
Not completely obvious to me, to be honest. I mean, we were a little bit disappointed with the original Portuguese budget that came out in March, but subsequently, after the May support package was announced by the European Union and the Euro members, Portugal, alongside Spain and indeed Italy, announced a significant strengthening of the measures, much more sort of big-ticket items, putting up VAT. The economy in the first quarter wasn't too bad actually in Portugal, so yeah, a bit hard to understand the timing, but we do still have concerns about Portugal.
And are you confident that Portugal can get their deficit down fast enough to stop the kind of speculation that we saw happening in Greece?
The Portuguese government and of this political complexion has done it before. They had a bit of a fiscal blowout in 2005, 2006, and they reacted to that by raising taxes. They have made some progress in cutting spending. The big challenge for them, though, and this is why we still have a negative outlook on the rating for Portugal, is economic growth. It's not really been a very strongly performing economy year after year, and it has a high level of foreign debt. That is going to weigh on growth going forward in Portugal, and that, I think, is a key risk.
Now, Standard & Poor's talking in the article in the FT today about their concerns over the UK for effectively the same reason, concerns about growth, saying that the AAA credit rating isn't absolutely secure. How do you feel about that?
I think the sort of growth rates that we're expecting are not that far out of line, actually, with what the OBL published before the budget. Now, that's not a very strong recovery for the UK. We're talking about getting back to something like 2.5% over the medium term.
So is the AAA
previous
rating
recoveries
secure?
have been much stronger than that. But with those sorts of growth rates and with the sort of fiscal adjustment that the government's committed to, the debt will stabilise and start falling. So at this point, we still have a stable outlook on the UK. We think it was a strong budget.
Now, European stress tests for banks, this, as John was saying earlier, Portugal now facing a bit of a real stress test, but the idea of them is to give us a lot more transparency and give investors confidence. How confident are you that they'll actually succeed in doing that?
Well, to some extent, they've got a template in the way the US went about it, because that was successful. The keys to that, I think, were a number of things. One, there was a lot of transparency in there. It was easy for investors to look at the assumptions which have been used, even if they didn't like them, plug in different numbers and you know, see what the numbers were. And they were tough enough to be credible. And crucially, there was a game plan. You know, if a bank was found to be lacking, there was a clear strategy what happened. So that's what they've got to follow.
But are we confident that they're actually going to do what the US did? There seems to be a lot of vacillating on that.
Well, I think the German finance minister was on the record this morning saying more or less exactly that. They've got to be credible, they've got to be transparent, there's got to be a clear path for a bank which is identified as needing more capital, firstly to try and go to the market, if not they seek official funds, and that's what they're saying. So it looks like they've learned the lesson, but you never know.
If the information does come out, how useful will it be to you?
Obviously, you know, we've done our own internal stress tests on the. I think to some extent it's about market perception, and particularly in Spain, I think there's been this issue that the Caja sector, which, you know, we've been downgrading the Cajas for a long time. The entire Spanish banking system looks like that sector, and that is just not the case. So if it is successful in allowing the market to more easily differentiate between the stronger banks and the weaker banks, and not tarring whole systems with the same brush, then it would have been very useful.
Okay, Brian Coulton of Fitch, thank you very much indeed for talking to us this morning.